Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Merry Christmas Eve and welcome to the Golden Nugget that airs at 12:30 Eastern Standard Time every single Wednesday on not only the legendary Verified Investing YouTube channel, but the Drew Wolfer YouTube channel, Drew Wolfer Twitter, Verified Investing Twitter, Facebook, Instagram, wherever it is that you're watching from. We appreciate you. Obviously, we are going to do some serious analysis inside of this video to tell you what are the upside targets on silver, what are the downside targets on silver, because let's be real, since the last time you saw me last week, this is worth a significantly more amount of money, and same thing with gold. Both of them hitting all-time highs, and silver is just absolutely going parabolic. In my opinion, whenever I see markets go up 50% or more in literally 1 month, pullbacks are imminent. That does not mean that silver is over. That does not mean that gold is over, right? We're going to lay out all the bullish and bearish case scenarios inside of this video, and I'm going to give you my bias and reasoning behind it. And without further ado, let's just get into our very first segment, which is going to be the commodity compass. Now, what is actually driving gold, silver, platinum, palladium, just the broader metals markets and then the financial markets right now? Well, first off, let's be honest, there is pretty light volume in terms of shorting here, okay? And there is a potential short squeeze that's been happening on silver that just keeps it going up and up and up and up, okay? Now, this is a time whenever institutions are, taking off. A lot of times during these holiday breaks, retail will control the market, and what do retail traders normally do? Well, they're not even really traders. They're usually just investors, and they just buy, and so that's why you're seeing all of this happen right now. And then whenever, the rug finally gets pulled and the institutions come back and start selling, a lot of these people that are super over leveraged are going to, let's say, sell their bags pretty quickly. Now, the Philly Fed manufacturing survey came in at about a negative 10.2 this past week instead of a 3.6, which was a huge miss. Okay, this was actually semi-bullish for the metals. Then we had CPI come in and it was less at 2.7, and then core CPI actually came in a little bit less too. 2.6 is where it came in, and 3% was what it was forecasted. And whenever CPI and inflation data comes in lower, the expectations of rate increases actually decrease, so that's not good for metals. GDP came in better than expected for Q3, which was a 4.3% increase instead of the forecasted 3.2. Again, not good for metals. And then jobless claims actually came in less, which is going to work against metals. Now, let's talk about the economic calendar, and then we're just going to get straight into the TA and what I think is going to be, happening inside of these markets, okay? Christmas is tomorrow, and then obviously the markets will be closed. There's going to be a lot of really light volume all the way up to about January 5th, okay? That's 2 Mondays away. Not really going to see much economic data coming out, okay? Because they're wrapping everything up this year, and that's just that. So you're not really going to hear much news from me in terms of economic data. Now, let's get into our third segment, and this is my favorite segment, and this is called the Golden Nugget, where I give you a golden nugget from the Golden Opportunity, which is the actual training that I brought out that teaches people how to trade inside of the metals markets and kind of shows you how I documented a 91.5% win rate in just 2025 alone on this show that you can go and verify and check anytime you want. And I'm going to give you a golden nugget that I have inside of the Golden Opportunity that I brought out in conjunction with Verified Investing. And this is going to be called the power of the parallel. Okay. So I want to kind of turn your attention over here to this parallel. We're going to take this pivot point off. Look at silver getting its move down. That's crazy. So what is happening on this parallel? If you go down here and you just zoom in on this just a little bit, if you drag from these lows to these lows to these lows, right? And then you just pull your parallel up to the highest point that you can see in between or before even those lows, you might see your next resistance point, right? And look where it tagged perfectly to that resistance point. These things, these parallels, they are absolutely hacks in the game. They are secrets, they are cheat codes, and let's be real, it called exactly where silver was about to reject today and yesterday. So that is pretty crazy, right? Now that we know that the parallels are an absolute secret that pro traders use, let's get into our third to last segment, which we were going to do, the silver snapshot first. We will do gauging gold next, which is silver and gold TA. I will give you all my targets, everything that you need to know, and then we will answer a couple of questions from the viewers. And if you have a question, drop it in the comments section. I'll be more than happy to address it whenever we, get onto the next show. I want to start off with market structure, okay? Market structure is like the key to almost everything. Now, I'm going to take the 1 month and the 1 week off because I don't think that matters. It's not pertinent for, what's going to be happening this next week, okay? We have to break above the all-time high, $72.75, in order to get a bullish market structure break to the upside on the 1 hour, the 4 hour, and the 12-hour chart. Now, as soon as we come down here to 68.64 and we close a candle below it, we are going to see a bearish market structure shift to the downside to a downtrend on the 1 hour chart right here at $68 almost exactly. 68.12 is going to be your 4 hour market structure shift, and then your 12-hour is at $64.50. So you're going to be seeing a little bit of support right here at about $64.50. You'll see a little bit more support here around the 68 to 68.50 range, and then further down than that, you're looking at support down here at about $57 to $59.50, and that is where your previous range was before we, continued going parabolic. Second to that, I want to say the 1 day market structure shift to a downtrend would be down here at $56.85. Okay, so you need to take those into account whenever you are looking at your trades. Now, let's talk about the Fibonacci's, because if we pull up our trend fib from 2020 all the way up till now, this is a bull run trend fib where we took the low to the high to the subsequent low after that, and it gave us this new support, and it was a resistance, the 2.618, okay? $66.40. If we drop below that, you're more than likely to come down here right to the 2.236 at $59. And the other one that I want you to turn your attention to is the 1970s bull run. I actually want to show you what this looks like. Pretty crazy. From the lows in the 70s to the high of the 80s to the lows of 1991. This gave you a price target, $68.57. Pretty crazy, right? So again, that $68.50 range is going to be a very key and pivotal range whenever we get down to it. So let's get down to the 4 hour chart really quick so we can kind of find some actionability inside of these charts. So we have a pivot point right up here that I want people to make sure that they're watching for. And guess where you break down? $68.50. This $68.50 is going to be a massive, massive level that you absolutely need to uphold. What I want you to also see are these all-time parallels. So we have these parallels way, 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 way back. We can go back, at least to the weekly chart, kind of show you where these are coming from. From these lows to these lows, dragged up to these highs. And as you can see, we've gotten outside of my first proprietary deviation zone, which is right up here in between $68 to $64, okay? Well, my second proprietary deviation zone is right up here at $80 to $85 is your next resistance, okay? Obviously, there's gonna be $75 in between there, but the $72 resistance was pretty big. And we ran right into it and absolutely smashed in and rejected from it, as you can see from this parallel right here, right? Which is the parallel that we taught you inside of the Golden Nugget, okay? So we need to uphold this parallel in order to stay bullish. And if we break down from $68.50, likely we are going to be coming down here to at least $64.75. And then if we lose those deviation zones, you will see a pretty precipitous fall. Now, I want to look at some ranges really quick before we move on to gold. This is the 2011 all-time high to swing low, okay? So we need to get back to the daily chart on this, and I'm going to have to zoom way, way, way out. So as you can see, this is the all-time high of 2011. This is the ultimate swing low that came after that. As you can see, we just front ran my second proprietary deviation zone at $73. So if you've been watching my channel at all, you know that I was talking about the $71 to $73.50 range as being a massive area of resistance that we could see potentially being the top on silver, and if not, could be something more along the lines of $75, because if we look at these other ones, right? If we take the low to the high on this nice parabolic run all the way up here, you can see we are in that secondary deviation zone, and we will have support down here at about $63, okay? Now, the last couple that I want you to look at, as you can see, this nice little move up after we cracked new all-time highs and then made another one, we have now rejected from the secondary deviation zone. And if you measure on this one, again, that new move up from this range low to this new all-time high, again, rejecting from that secondary deviation zone. Look at this one. Boom, rejected from the secondary deviation zone. Okay, these are things I've been talking about for days and days and days and weeks. And your ultimate level of resistance is going to be right here at about $74.50 up to about $75 on silver. Now, where are your supports? Because we know where our resistance is, right? Well, our supports, it's pretty easy to find these. And the easiest way to find it is if you go to your Fibonacci's, this bad boy right here. This is like your parabolic move up after you set new all-time highs back here from about $40, $37 up here. Your ultimate level of support is going to be here at about $54. Your secondary level of support is going to be right here at this consolidation zone low at $57 to about $60. And your third is going to be right here at about $64. So if you smash through and get through $64, it's likely you're coming down here to about $60. Then if you lose 57, you're probably going to hit 54. And then, you know, we can talk about the other ones after that because I don't think we're going to hit 54 by the time you see me next week. It's gauging gold time. As you can see, we have these pivots that are up here that have formed a very bearish pattern. We'll just say it's a bearish pattern on gold, okay? And we did get a nice topping tail candle right in here. So here's your topping tail. Here is your rising wedge. If you break down below about $4,400, you're going to see a fall, right? And you have double top resistance, right? Or support right here at about 4,400, 4,380, somewhere in that realm. But if you fall below that, you're likely to come down here to about $4,200. And if you lose these range lows right here, you're going to come down and fill this gap to about $4,126. And then your ultimate level of support is going to be down here at about $4,000. So let's look at some things that could potentially make that happen. So your 1 hour, your 12 hour, and your 4 hour break of structure are all going to be at the same place. $4,464. So we don't have far to go down in order to break that. And then obviously, I believe actually your 12 hours down here, this is your 1 hour and your 4 hour. I apologize on that. Then your 12 hours all the way down here at about 42.86. And this is what really saves the day for you. $3,900 is where your 1 day market structure shift would happen. So long as you stay above that, you are bullish on the daily, weekly, and monthly chart for this long-term uptrend. So we're talking in terms of short-term pullbacks on this. We're not talking about, you know, gold and silver going all the way down here, right? But these would be your ultimate supports, your double top support right here at $3,500 and your double top or your ultimate support at $3,450. Now I want to show you a Fibonacci really quick. Okay, so the first Fibonacci I want you to understand is a trend-based Fibonacci that is from the 2015 bottom to the top and then to the subsequent bottom that came after that, okay? We have $4,400, $4,359 actually is going to be your first level of support, then your second level of support right there at $39 or $3,952. Now, if we look at this 2018 trend-based fib, it's giving a price target of almost $5,000 to the upside, and we have now reclaimed and actually bounced from the 2.618. So that is going to be an ultimate level of support right here, $4,000 in my opinion. And then you've got your massive level of support down here at about 36.80, and then your prior kind of triple top right here, boom, 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 at about $3,500, almost exactly. The other thing I want to point out are these ranges, okay? So if we go to our big range right here from about $4,000 to about $4,300, and we zoom in a little bit, you can see that gold is getting caught up at my secondary deviation zone, and you have support at 4,300, and then you have support at 42.24, 41.50, and then ultimately $40.73 and $4,000 to complete the full rotation of that entire range. Now, on this nice little move up after we consolidated, trying to get back up to this all-time high, and then we rejected, right? If you look from the bottom to the top on that, you're seeing that we are also rejecting from my proprietary deviation zone. Now let's look at this one. This is our most recent move, and this is giving us a potential price target of 4650 to 4750 on those two proprietary deviation zones. So you're probably going to see pretty decent resistance here at about 47 to 4800, and then ultimate resistance at about $5,000. Okay. So in my opinion, if we're looking at what gold and silver are going to do, there's a couple of scenarios. So first off, gold could just go down and bring the rest of the metals markets down with it. But now we have this caveat where if silver gets a massive move down, it now, because of the parabolic nature of it, has this unique ability to drag down the rest of the broader metals markets with it as well, because it's almost like a FOMO asset, a retail asset right now. And once people start selling their silver, everybody's going to start selling all of these other metals as well. Now, a lot of people aren't going to sell these before year end because, they're not going to want to pay the taxes on it yet. They will likely wait until the first week or even first month of January, and they'll probably likely be selling with the institutions. Now, the one other caveat that I want people to understand, there's a lot of people in the comments section that are absolutely losing their mind every single time I say silver could potentially go down, right? And here's your supports and stuff. I'm not saying that silver is going to zero, but people are still absolutely freaking out whenever I say this. So what that tells me, and this is market psychology, that tells me that all of those people, and if you're one of them, pay attention to this. That tells me that you are so overextended and so over invested or leveraged inside of this market that if silver did pull back, it would indeed lose you so much money that it would be unbearable. That is what we call inside of the markets. It is a psychological factor, and it is actually studied in the markets. That is called max pain, the place that loses the most people, the most money, all at the same time, where the institutions can soak up those premiums and then buy things back or sell things down and get their bags back. So let's get into the questions really quick, because I do technically think that silver has a much higher likelihood of a pullback because of its grossly overextended nature than gold does, right? Gold's kind of just inching up, but if silver takes a big dump, you're going to see everything else take a big dump. We have Javier Alejandro 5360 that says, I'll recommend you my barber. I have to take off my Santa hat for this. Well, Javier, we've addressed this multiple times on the stream. People come for the braids, but they stay for the trades, my man. They like that 91% win rate. And in true Nordic Viking fashion, if you have the ability to make me the king of all Norway, then I can cut my hair. But until I am the king of all Norway, I am not allowed to cut my hair. So if you want me to have a haircut, then we're going to have to take a haircut on the win rate as well. So you can have 40% in the hard part, or you can have a 91% win rate and some Viking braids, baby. So with that being said, I hope everybody has a Merry Christmas tomorrow, and we will see how all of this plays out next week coming into the Golden Nugget at, you guessed it, 12:30 Eastern Standard Time. I hope to see you there. Everybody have a beautiful week coming up and a great holiday with your beautiful families. Take some time off, man. We made a lot of gains this year. We had a 91.5% win rate. Reflect, have a good time with your family. Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.